A record number of Chinese companies could list in the US this year. In the first half of 2025, 36 Chinese firms went public in the United States. There were a record 64 such listings last year. Many of those firms went public through special purpose acquisition companies, that's known as SPACs. And they are listed companies set up to buy mainly startups, avoiding the quite lengthy IPO process. At least 40 Chinese companies are waiting to list on the NASDAQ. Now, if all or most of those go through, it would mean that 2025 takes the record for the most listings. The total market value of Chinese companies who are already listed in the US is around $1 trillion. And that list includes tech giants like Baidu, JD.com and Alibaba. Let's talk to David Bartz, who's partner and co-head of capital markets practice at law firm K&L Gates. Great to have you on the programme. So why wouldn't you have expected Chinese firms to retreat from the US, considering all of the trade turmoil and the impact that might have on deal-making?
Thank you. Appreciate it for asking the question. Thank you for having me join here today. So I think what you're seeing right now is just kind of the attraction of the U.S. market. I think is why still so many Chinese companies are looking to list in the United States. And that's just been a trend that's kind of been increasing over the last 5 or so years. You're seeing more Chinese companies and more foreign private issuer companies listing in the United States. You're seeing more IPOs. Generally speaking, they're kind of smaller dollar amounts, so a lot of them are in the micro-cap space. But they're attracting the U.S. market for a variety of reasons. One, it's the largest capital markets exchanges in the world, with both NASDAQ and the NYSE together. It also is raising companies' profiles. So they're able to gain access to capital markets, raise their profiles, and if they're also interested potentially looking to list in another exchange, having a NASDAQ or NYSE listing I think is very helpful for those companies. So I think right now, even with the turmoil in the markets, folks are still looking to the U.S.
It's interesting that you mentioned that despite all of the geopolitical turmoil going on, that those small cap companies are still interested to take that risk in the United States. So it's more about that opportunity rather than the hurdles domestically, that long, that more arduous process of going public in China.
Yes, I think that's right. I think a lot of it goes to, especially looking historically, it's been tech companies, but also even more so healthcare and life science companies looking to list in the United States, and especially in NASDAQ. It's got a long history of those companies finding a home on NASDAQ, and the U.S. investors, particularly, have been looking for pre-revenue companies. There's really no issue with pre-revenue companies listing on NASDAQ and finding a home there, really kind of raising their profile, and then if they're able to make it big, then continuing on and finding the capital that they need. So I think companies are still willing to take that risk.
And who would you say that this listing surge is good for? Is it the Chinese companies? Is it investors? Is it the NASDAQ and the New York Stock Exchange?
I think it's probably all of the above. You know, the companies here, they're looking for more capital so they can take their companies to the next level. Investors are looking to find ways that they can, put their capital to work in helping these companies. Can be a great way, especially if it's a technology or a life science company. You could find that next breakthrough. And then, of course, for NASDAQ, it can also be good for it as it's raising its profile and the associated fees that go along with that. So I really think it could be a win-win-win situation.
So let's talk about how they're doing it, because listing domestically has a lot of regulatory hoops to jump through. But now there are these SPACs, and they're proving particularly attractive to these Chinese companies. So talk us through that system.
Yeah, so as you kind of alluded to, there's several ways to go public, but kind of I'd say the main two ways right now, traditional IPO process, and that goes, maybe anywhere from, 9 to 12 months long. SPAC process can be a bit on the shorter side of it, where the IPO, you're looking to sell new shares into the market and folks are buying those. When the SPAC process, instead, a SPAC goes public on its own. It raises that capital, maybe a year or two before then entering into a business combination with a private company and taking the private company public that way. So they already have built-in investors in those markets with the SPAC. So it kind of, reduces those uncertainties and some of the market uncertainties, especially that we're seeing right now. The issue that you have, though, is you still have to go through the regulatory process. In the last few years after kind of the COVID pop with SPACs, they kind of receded some, but now you're seeing kind of a new increase in SPACs, especially part of that's with some of the uncertainties in the IPO market, with some of the macro issues, kind of some of the winds, kind of the headwinds that folks are looking to the SPACs again. And I think you're seeing kind of new SPAC sponsors that have had, multiple SPACs before. So they have a track record of success. And they're looking for those companies that fit their profile to take public.
Brilliant stuff. Thank you, David Bartz at K&L Gates. Thank you.